The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 12 May 2023. Well, I'm starting off this week with the CME Group, Commodity Exchange Metal Depository Statistics. And you can download this from the website from the CME anytime you'd like. I think you do have to have Excel in order to do it. What I want to point out here is something that I have not seen in a long time. In fact, really in the last 20 years, and that is the registered category of silver under 30 million ounces. Just under, but it's still under 30 million. Usually I've seen it down to 33, 34, 35 in that range a couple times. And both times in the past when it's gotten that range, a lot more metal has come in to the registered category from wherever it was. And this time it hasn't. We've been in this 35 million or less range for quite some time. And I think that the supply chain is getting tighter and tighter based on a lot of factors. The drainage of physical out of the ETF or ETFs, the fact that the registered can't seem to get above 35 million ounces. If we look at who in the registered category has the most silver, not surprisingly, it's JP Morgan has got about 10 million ounces registered. The next up on the list is Manfra with 5 million. So there's 15. So that's half of it right there between those two banks. You look up further up, I won't scroll, but Delaware Depository, practically nothing in the registered. It's almost all held by long-term investors, 42 million ounces. HSBC, it's got about 2.5 in the registered, 15. So I'll read the whole thing to you, but I just want to point this out. That is the lowest I have seen, like as I said, in probably 20 years or so. Now, on the gold side, we've seen the gold ETF inflows continue in April, but this is from the World Gold Council. But read the article, really what it says is they had 15 tons come in recently, but if you look back just a little while back, 13 million tons had left the first quarter. So really it's a net 2 million tons. There we go. However, the World Gold Council noted that gold ETF demand remained negative for the first 4 months of 2023, with holdings falling 13 tons. So even though the headline is true, but a little misleading because it's just bumped up slightly if you take the whole 4 months into account. And this article really doesn't tell us a whole lot from Market Watch. Gold scores back-to-back gains ahead of U.S. inflation readings this week. This came out earlier in the week on Tuesday, but gold's been making prints above 2,000 and it's kind of wallowing in that range. I think it's going to break out fairly soon, and where it lands, nobody knows, but once we get above the old high and stabilize there, we should continue upward for a while. Commitment of traders is favorable, certainly not very favorable, but favorable enough to see some more upside for both the metals at this point in time. And this is from Yahoo Finance. Again, silver ETF to benefit from record demand and industrial usage. What they're claiming here is that you'll see more and more purchases in the ETF, and of course that would mean more stress on the physical demand. And that's all well and good. It remains to be determined. Not saying that there won't be more interest in physical silver. There certainly will be. But we're getting kind of mixed messages from the market, seeing how much silver is leaving facilities that have physical versus how many derivatives are being produced.
There is nothing more critical to your financial future than a sound money system. This is the premise of the Morgan Report. To understand where you are going, you need to know where we've been and why our current monetary system is crumbling like a house of cards. More importantly, you need to know how to build and preserve your wealth even in these uncertain market conditions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history. Will you be in when it happens or sitting on the sidelines wondering what just happened? Join our free email list at themorganreport.com. Become informed, awake, and aware.
An article from Andy Mukalo. Gold isn't the only metal benefiting from economic uncertainty. Of course, anyone that follows my work or those of many others will tell you that silver really is the go-to metal in an economic collapse. Not that we're going to have a complete collapse, but certainly in times of uncertainty, silver does the same job as gold. In fact, if it's an inflationary environment or perceived inflationary environment, Usually silver does better. In fact, I'll quote Professor Roy S. Jastrom that wrote The Golden Constant. After that, he wrote Silver, the Restless Metal. And what he determined about silver was that it is more volatile, we all know that, but that it actually outperformed anything in a highly inflationary environment. Just because that's the truth of many decades ago, does that portend it's going to hold the next time? And the answer is no. But it is very likely that it would. From one of the big refiners, Heraeus, I'm not going to read the whole thing. I just really want to point out here that there are more and more and more uses for silver all the time. This is proof positive of that. Innovative antimicrobial technology, AGXX, prevents microbial infestation and biofilm formation. I'm not going to read the article again. I just wanted to show you the headline and point out again that there's more and more uses for silver found all the time. As I pointed out many times, water filtration is one of the ones. It isn't really talked about very much. The Silver Institute certainly has talked about it in the past, but the antimicrobial properties of silver make it highly coveted, especially for purification of water and other situations where it's needed. Well, I can't leave out platinum since I talked about the ETFs for gold, the ETFs for silver, so why not platinum? Platinum ETFs, ETNs may shine in metals demand. Demand for platinum is increasing because of investment demand, a recovery in automobile sales, and further tightening of emission standards. Not to mention all the problems in South Africa. Increases in investment demand, a recovery in automotive sales, and further tightening put a positive picture for platinum. Industrial demand for platinum is expected to increase because of its versatility as economies around the world continue to grow. They're not telling you here, and reading between the lines, is that it's cheaper than palladium and it serves the same function. And the Platinum Guild, as I've said in many of these updates, has talked about platinum being used instead of palladium in the catalytic converter space. Expected further supported by recovery in the automobile industry. We've already talked about that. Third force is likely to give positive support to demand of platinum is increased demand for jewelry. The demand for platinum jewelry has steadily been increasing around the world, but most recently is witnessing spiked demand in China. As for the near future, the demand in China is expected to be sustainable, if not increase, as wages and personal disposable income are expected to rise. Certainly, the amount of platinum jewelry is not that significant. It really started in Japan because during the war, the last war, they couldn't use gold, and so they went to platinum. That, of course, has ended long ago, but at that time, that's why it even started the platinum jewelry industry. Lastly, I'll bring up Palladium. This is from barchart.com. Has Palladium found a bottom? You can read the article. It shows the chart here. And we've really got kind of a double bottom here and here. Does that prove anything? Not yet. It maybe has found a bottom, but I'm not so sure. I'm actually looking for platinum and palladium to pretty much go to par, which would mean $1,200 an ounce palladium and $1,200 an ounce platinum. As an example, it could be 13.13, 14.14, or whatever. But certainly the long-term spread I put on with short palladium, long platinum has certainly worked out, and I don't plan on lifting that trade-off at this time. I think there's more to go. I had to throw this in at the end. The rising chorus of renewable energy skeptics. The green techno dream is so vastly destructive, they say, we have to come up with a different plan. Highly recommend those that are open-minded to take a look at this and realize what I and others have put out as absolute fact as far as how much mining would need to take place in order to go to an all-electric system and forfeiting all hydrocarbons. And that is not going to happen, in my view, at least not for a long time. And the problem with renewables is there are no renewables. I mean, solar panels are good for 20, 25 years. These big wind machines that are supposed to be good for about the same duration are breaking down about half the time. So they have to be replaced. They're not renewable. They're not there forever. The sun's there more or less forever, but a solar panel isn't. Neither is a wind machine. Even hydro, you could say, might go for quite a while, but maybe the river or dam would dry up after a while. Don't want to get too involved in the statement. It's just that there is no such thing for renewable energy at this time. It can last quite a while, but the payback on solar panels, at least in my own efforts here where I'm at, I think the payback was about 8 years. So what I put down as a upfront cost, will pay itself back based on current cost of electricity here in about 8 years. So I've got about 12 years where I get quote unquote free energy, but it's not renewable. It is good for those remaining 12 years, but after that time, I'll be 20 years old and they have to be replaced. So leave it there. Wishing everyone a wonderful summer coming up, and I will be back with you next week with another weekly perspective. This is David Morgan of themorganreport.com.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, and you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.